I think everybody thought the market would be tighter in the first quarter. We had warmer weather, so I think that played a key role. Second, Russian supply. We all thought they would come down a little bit quicker. These are the factors that probably kept the oil prices on a downward slope, but also people not sure if OPEC Plus is going to deliver. But if I look forward, what do we get? We already seen that exports from OPEC Plus is coming down. Russia will reduce, not because they can't, because they will adhere to the OPEC Plus agreement. So that part of the equation is going to work out quite nicely. That brings down quickly 1.5 and more barrels. So I think if you add this one, we're going to draw inventory throughout the second half of the year. The question is how much demand, how much risk the market sees in terms of recession. If people believe we have back in terms of pricing power, then we should crawl higher towards $90, 95. That's what we're looking at. So I think the ingredients are there. That didn't work out. We understand why, but forward looking, I would just still look for a tight market.
So, Dominic, it does look like the market is somewhat sensitive. If the Brent price, for instance, has been just very bumpy this year. What, 88 at the high, 71 at the low. That's a switch of about $17 in between on the trade. What happens from here with OPEC? Because, you know, production cuts were meant to really support the price. It hasn't happened. So what's the next step for OPEC Plus?
So first of all, I mean, the production cuts just started in May. So if you think about, we need to see now what's happening with the inventory side. If inventories draw nicely and prices go further up, I think OPEC is going to be happy where they are. We don't need to do much anymore. So I think that's one element. Obviously, if demand suddenly turns out to be much weaker, I think OPEC needs to come back to the table and reduce production once more. So I think that's clear. They're here to try to give a floor to prices, and if possible, if demand allows it, to bring prices higher. So it's still in the hand of OPEC at this point in time, because if I look at US production, for example, from here, we're not going to see much supply coming in. So yeah, I think they have the ability to manage the price in the second half of the year.
Dominic, how do we think about the US consumer at this point? Because we've been talking about it from a different context, just how strong the spending has been on Main Street, has been somewhat resilient, even if you've had a slight switch in some of the consumer behaviours around trading down and spending more on food than non-discretionary items. At this point in the cycle, the US consumer has still shown us that they have some firepower. What if that changes? How does that impact the oil price from here?
Well, I think there's two-way it impacts. So first of all, I mean, U.S. demand is robust. I think that's how we should look at it. We pencil in no growth. Just be very clear. The idea was never that, and I think you heard it before from previous speaker, that that's not where the demand growth is going to come from. So everybody's all quite bearish already, or at least conservative when it comes to US consumption. I think the main impact right now is more through the futures market, through investors not really want to taking position. Why would you? You have a Fed that want to push the economy into potentially in a recession, not explicitly, but it wants to slow it. And if you think about how oil behaves in a risk-off environment, you don't want to touch it. That's why investment demand in oil has been receding quite strongly. And I think that was the key effect for this, at least for now. I think on the real side, on the demand side, we shouldn't be worried that much. Even if we're going to see a reduction in demand by 0.2 in case the US consumption would start to soften, that's not going to be the big game changer. It's more the investment side.
Dominic, a slight left field question. I'm not sure how this fits into your wheelhouse, but I'm going to ask it anyway. Exxon over the weekend has been looking at moving into a different area away from fossil fuels. I mean, obviously the focus has been on oil for many years for this giant in the United States, but now it's looking to lithium and trying to explore that area of the market, given the change we've seen around electric vehicles. What do you make of this change of ownership, the broadening out of portfolios we're going to see from some of these major US companies?
Well, it's about time. I think some of the American companies have been reluctant to make that shift into areas of more renewable sources or everything related to that. Europe has been a little bit more on the front foot with regard to some of the big oil companies. So they're a little bit catching up. It's a good sign that we move in the right direction. We want to allocate more capital to renewable. We need to get rid of oil. I think that's what we all need to understand. On the other side, what it also tells me when it comes back to oil, we're not going to have the investment. Yet you and us, all of us, we're still going to consume a fair bit of oil. It's going to hit the record demand levels, 103 million barrels. So that might still mean for us that there's going to be an imbalance, and that means high prices still ahead, even though we want to get rid of the oil over the next 10 years.